So let's talk about life insurance. So you might be asking, do you even need life insurance? And the only question you need to answer to figure out the answer to that previous question is, do you have anyone that depends on you financially? So life insurance pays out after your death to the people you designate as beneficiaries. So that could be your children, a spouse, or other family members. The life insurance payout can pay debts such as mortgages, replace your income, and provide college tuition funds. So determine how much life insurance you need based on your family's needs and priorities. So this calculator will help. So let's go to it. So this is using NerdWallet. So it'll give you a really good overview, which is something that I have used, the information that they have. And you can just go and compare quotes. Right? And you can input all of this information. And once you go through each step, like the quote, the customize and compare, it's going to give you a number where they think it's a good number for you in terms of the amount of life insurance you should actually have. So I encourage you to go through this process. Yes, they might have your information, but it's a good process to go through. So So it's generally a good idea to have your own policy in addition to the coverage provided by your employer if your employer offers life insurance and you want to apply when you're healthy. So the policy through your employer is likely not enough to meet your family's financial needs and typically ends if you leave the job. So you want life insurance that is portable. And so you want to apply when you're healthy because life insurance companies usually use life expectancy as the basis for determining rates. So anything that could shorten your life expectancy could lead to a higher price. So your age, your gender, any medical conditions, your family's health history, they're all taken into consideration. So you want to get life insurance the youngest that you can get it and the healthiest you can get it. So let's talk about the types of life insurance. So there's two main types. One is term life, the other is permanent life. So term life insurance covers a limited time period. So it could be 10, 20, or 30 years, and it does not build cash value. And if you die within the term, your beneficiaries receive a payout. If you die outside of the term, they receive nothing, right? And then permanent life insurance costs more than term, but offers additional features like the cash value that you can borrow against, and the cash value also grows over time. And so whole life is the best known example of permanent life insurance, and there's other types such as universal, variable universal. You can check it out here at this link if you want to see more types of life insurance, but we're just going to kind of cover mostly term and whole since those are the most popular options. So let's do a comparison of term, whole, and universal. So I said universal is another type of permanent life insurance, and you'll see kind of the features of each here and understand it a bit more. So here's a feature, choices in policy length. So with term life, like we said, you could have 10, 20, 30 years. So you can pick how long you want the policy to last. Whereas whole life and universal life is literally for your whole entire life. That's why it's called whole life. And that's why it's called permanent, because it's permanent. It's for your whole entire life. Next is builds cash value. So term life doesn't do that, as we talked about, but whole life and universal life does. So basically, you can build up cash in this account, and then you can invest that cash. Next is premium payments may be flexible. So that's not true for term and whole, but it is true for universal, which is kind of that the twist on universal in terms of why it's different than whole and how there could be different types of permanent life insurances. So you can see details regarding premium flexibility and death benefit flexibility vary for universal life policies. So next is death benefit. Death benefit amount may be flexible. So that's dependent on the universal life policy as well. So you're going to have to see and read through the dotted lines to understand that. Next is most affordable way to buy life insurance. NerdWallet wholly endorses term life. And then last is the cash value usually can be linked to investments. So that's only true of universal life. So you might be saying, okay, here are the features, but like, which one should I pick, term or whole? So you want to choose term if you only need life insurance to replace your income over a certain period, such as the years you're raising your kids or paying off your mortgage. Also, it's great if you want more affordable coverage because it's cheaper. And then think you might want permanent life insurance, but you just can't afford it right now. And so most term life policies are convertible to permanent coverage, but the deadline for conversion varies by policy. And the terms of just how much you pay and your health status could change, right? If you convert to whole. So I'm going to say this right now. I'm going to tell you, probably for everyone listening right now, term makes the most sense. Okay, it's the cheapest. It covers, it can cover up to 30 years-ish. The idea that you can build up cash value is interesting. However, you could easily not build up cash value, just pay cheaper life insurance by doing term and then take the extra money you have laying around in your budget and then invest it into an HSA or invest it into an S&P 500 or invest it into a REIT or invest into an investment property or invest into municipal bonds, right? There's all these other tax advantage situations that you could be dealing with and also be saving for your retirement that you don't necessarily need to pay extra in your premiums to build up some type of cash value. And I've actually, even for myself, looked at life insurance, and I obviously don't need it now because I don't have a mortgage, I don't have any kids, and no one depends on me financially. But I looked at it, and because this is like literally probably the best time to get life insurance because I'm so young and I'm super healthy. But the reality was that I was like, I was trying to figure out how to make it work so that it would make sense for me to get whole life insurance. But what I found was that how much I would be paying in whole life premiums over time was so much more money than I would get in benefit, or my beneficiaries would get in benefit if I died, right? So it's just kind of like, okay, yeah, like I could get even a $10 million type of policy, but with the amount that I'm paying, it's not really worth it when you compare it to the fact that I could have just invested my money into an S&P 500 index and come out higher, right? So, for most of us, it's going to make more sense to just get the term life because we're not paying as much. And then we can use that extra money to invest and get a higher return and actually make more money and have more money over the long run than having a whole life insurance policy. So that, if I got a $10 million whole life policy, the amount of money that I paid in premiums, if I invested it, it would be north of $10 million. And I forgot the specific number, but it was like $12 million, say. Right? So for most of us, it doesn't make sense. Let's talk about when it does make sense. So people who pick whole life, they say, really rich people, the wealthy pick whole life. And it's like, okay, well, if the wealthy pick whole life because it makes sense, right? So they want to provide money for their heirs to pay estate taxes. So in 2019, estates worth more than $11.4 million per individual or $22.8 million per couple are subject to federal estate taxes, and state estate taxes vary. So you can look and see the state estate and inheritance taxes from the tax foundation using that link right there. I'm pretty sure oh no, you can't use it, but you can look it up on NerdWallet and see it if you really want to know. But here's the reality. If you know that, okay, if you know in 30 years time or today that you're going to have an estate, it's just you, that's $11.4 million. Or if you're in a relationship, you're a couple, you're going to have at least $22.8 million, then yes, buy whole life. Not to say that we're not going to get to an estate that is worth 22.8 or 11.4. I don't think that's true of us. I think that we all can do that depending on your priorities. And we know based off your own life and financial goals, it's dependent on what you think is valuable to you and your own alignment to your own truth or truths. But, typically we might not think that might get to that 11.4 million or that 22.8 million mark. Is it super surprising for you to get there? No, I don't think so. Say you're a lawyer and you finally finish paying off your student loans, blah, 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 blah. You don't have any debt. You shouldn't have any credit card debt, as we know. You might have a mortgage, whatever, but you're going to pay it off, obviously, in 30 years because you have to. That's forced, right? So you could say probably, okay, in 30 years, whatever, I'm going to be like 65. And at that point, it would be kind of beneficial for my kids or whatever beneficiaries to have my estate later. And actually, my estate is high because not only is my house, I bought a house in an up and coming area in Denver, say, right? And I bought it for $750. Now it's worth $1.5 million. Okay. And this is, again, assuming that even the taxes will be the same in 30 years in the future, right? They just changed this in 2019 to be 11.4. I think several years ago, like in 2016, it was like 5 million something. So you don't know what taxes are going to be like in the future with this, but say, okay, you have $1.5 million value home and you have been investing and both partners have been investing, and you do hit that 22.8 million, right? Say you've been putting 75% both of your salaries to investing, and say that was like 200 grand a year. I don't know. Okay, fine. Yeah, you could have actually maybe in the future have an estate that's worth $22.8 million. That's not super surprising. So just think about, again, that's why you have to know your whole entire financial situation. Just think about that thought, okay, do I think I'm going to get there or not? So again, you can see some other examples. So if you have heirs, you might be forced to sell off parts of your estate to pay the tax bill without an insurance payout. If you have a lifelong dependent, such as a child with special needs, you can have a life insurance that can fund a special needs trust to provide care for your child after you're gone. And you also want to consult an attorney and financial advisor if you want to set up a trust. If you want to spend your retirement savings and leave an inheritance or money for final expenses such as funeral costs, if you want to equalize inheritances, if you plan to leave a business or property to one child, whole life insurance could compensate your other child. So there are situations where whole life makes sense, but I'm going to say right now, probably for the majority of us, term life makes sense, more sense. So what you want to do is match your needs with the type of plan. So you can see this little diagram here and you can kind of work through it. So, okay, am I the breadwinner? So life insurance can help me because it can replace the lost income after my death, so that my family can continue to pay for everyday expenses. So I can get term life to cover my working years. Stay-at-home parent, divorced parent, parent of a special needs child, homeowners with a mortgage, someone with a co-signed debt such as student loans or credit cards, high net worth individual, someone who wants to provide an inheritance, business owner, investor who has maxed out other retirement plans. So go through these and think about your situation and then see what type of plan you should get according to this diagram, the best option according to NerdWallet. And then you might be saying, what is the cost of this? You're saying, yes, my family might get $1 million once I die, but how much is it going to cost me now? So we can see this diagram, this graph, this chart, where we can see the person covered. Male, age 30, female, 30, male, 40, male, 50, or female, whatever. Then we can see the policy amount, and they have 250 grand, 500 grand, and $1 million. And then they say the annual premiums using an average of 3 lowest prices available in each category for healthy men and women. So it's typically for healthy, right? And it's the average of the 3 lowest prices for each of these types of insurance. So you can see for whole life, let's just say you're a female that's 30. You can see, okay, if I want a 500 grand plan for my whole entire life, that's going to cost me $4,241. Whereas if I just get a 30-year term life, which is probably going to cover like almost the majority of the rest of my working life, that's $314. And then 20-year, okay, it might not get me all the way to when I retire, it's $201. And remember, this is per month. So look at this, like female 50, if you wanted $1 million, you would have to pay 18 grand for whole life. Now, okay, you're 50, say you're going to spend 15 more years working. If you invested 18 grand into the S&P 500 index every month, you would make way more money than $1 million, right? So that's why I say, in general, if you don't have those situations that we just went over before, in terms of estate taxes, maybe a dependent child with special needs, it really doesn't make sense, right? Because you could easily invest the amount of money that you're putting into the whole life insurance, into the S&P 500 every single month, 18 grand every single month. So what is that? 18 grand. Let's do the math. 18 grand times 12 is contributing $216,000 a year. And obviously you probably can afford that. That's why you're doing that and you're getting this $1 million policy. But it's like, okay, 216 grand times 15, if you do that every year for the next 15 years, that's $3,240,000. It just doesn't make sense. So it doesn't make sense. And obviously it's for people that are probably super desperate. Like if you're doing that, then maybe you do think that, you're not the healthiest person, but this is for healthy people too. So in some senses, it's kind of a ripoff. But hey, if you say you're 30 years old now and you get it at 30, that's $8,280. Right, a month, right? And so that's $99,360 a year. So you're contributing 100 grand a year. But just even think about that. That's obviously way less than contributing what we were contributing before at 50. But if I contributed $100,000 a year to my S&P 500 index fund, right, and I'm 30, and I could do that for the next 35 years, maybe, right? You're at 3.5 million still, right? And at that point, again, if I contributed 3.5 million into the S&P 500 index fund, and after inflation, I'm getting an 8% return, why am I investing in whole life, right? So yes, if your estate is super large, life insurance makes sense because there is a tax benefit to giving it to your heirs and helping them cover those expenses once you die. But in terms of us, like us people who don't expect necessarily to have such a high estate, It makes absolutely no sense. Get your term life, get your 30-year term life, and then invest the extra money into all the investment accounts we talked about.